Welcome to the Note Investor Podcast. We'll guide you through the ups and downs of note investing and teach you all about the nitty-gritty details of the business that other people won't talk about. Your host, Dan Deppen, is a former aerospace engineer and product manager who transitioned away from cubicle life to full-time note investing in 2018. Our website is www.fusionnotes.com, where you can subscribe to this podcast, comment, and find links to other information on note investing.
Hey everyone, welcome to the Note Investor Podcast. I'm your host, Dan Deppen, and today I'm joined by Fred Moskowitz. So Fred, how you doing?
Hello, Dan. Doing wonderful. Thanks for having me on today.
Yeah, of course. I was glad to have you back. I think this might be like the third appearance, so that might be a record. But
a record
yeah.
holder. Nice.
So I'm not sure exactly when this is gonna air, but we're recording this a little bit after the Paper Source conference. We got to meet up face to face for the first time in a while, so that was really nice.
Yeah, absolutely. It's wonderful to be back at live events in person and seeing people. And as a long time person in this industry, this is something I always talk about. One of the most important things for being successful in the note investing industry is getting out to live conferences, networking with people, and meeting people, because those relationships, that's where business happens. It's all through personal relationships, and it's important to meet people, see each other, right? Sometimes we're working over the phone, over email with different vendors, different partners, and we don't have a chance to interact in person. So I feel that's so important, and it's great to have that back again after a few year hiatus, for sure.
Yeah, definitely. There's just a lot of stuff that happens there that doesn't happen elsewhere. Like I know I came away with a couple tapes, and Paper Source in particular, I found to be kind of an interesting crowd. Like there were a lot of folks there that have been at it for decades. Like I talked to a couple people who've been at it since like the early 80s and even the 70s. And a lot of those folks, like you're just not really going to meet online. So if you don't see them at one of those conferences, you're not necessarily going to come across them.
Yeah, that's so true. Just a wealth of experience, of cumulative years of experience is in that room. That's for sure. Completely agree with you.
Yeah, and it was interesting how they invested through all these different cycles through the 80s and the 90s and now. And, we're talking about some of the different economic things going on with interest rates and inflation going up. And a lot of these folks seem fairly unfazed by it all because they had lived through 20% interest rates 40 years ago and other stuff. And yeah, they've kind of seen it all.
Yeah, absolutely. It's definitely an interesting perspective, and the note industry, it's very similar to real estate in that there's market cycles, right? And the market cycles may last from 7 to 10 years typically. And right now we've been through a very atypical market cycle because of the long length of it. So it's definitely an interesting perspective to talk to some of the people with decades of experience and hear the perspectives that they bring to the conversation. Really, really agree with you on that, Dan.
Yeah, definitely. Yeah, it's definitely some interesting stuff in there. So, and then I think, you gave a presentation and there's part of it as well. Like maybe you could talk a little bit about that. I wasn't able to catch the entire part of it, but I think you did some talking about due diligence. And
I did. Yeah, I did a presentation about due diligence, and I wanted to bring attention to some of the lesser known details about due diligence. Some of it is things that I encounter in the everyday details of working in the note business. but I'll share with you a couple of points. One that people may not fully understand is really paying attention to jurisdictional nuances that come about in some of the cities and counties where we're doing note investing. There's been a lot of counties. Some of the counties I mentioned, Cook County in Illinois, right in
Hmm.
Chicago, and in Philadelphia, where my home base is. I mean, there's some nuances there. Let's say that have to do with the court system and the way things work, and there's an impact. And so, one of the most valuable things that you can do as an investor is make sure you have good legal representation, specifically in that jurisdiction. I mean, yeah, you need legal representation for the state where the note is, but and some of these you really want someone that's very local. They know the ins and outs of dealing in the court system and working with the different judges and so on, because if you don't have that, you could get subject to all kinds of delays and complications that will just really be unnecessary. They can be avoided. And so that was one of the points I really wanted to stress on. And I always love sharing about the experiences and sharing my expertise, because when I'm out speaking at a conference, I'm not getting up on stage to sell anything or to pitch a note fund or anything like that. I'm there to add value to others, share my expertise. And you know why, Dan? Because when I was starting out in this industry, that's how I learned. People shared, people poured into me, and that's how I learned so many things. I learned from some of the most successful note investors that are out there. And so I want to pass that on to others as well. And that's the approach I take.
No, it's very cool. So like, what are some of the examples like in Philadelphia? Like I know in general, like Pennsylvania has been a difficult state with the attorney general, at least as it relates to like harbor contract for deeds. But like, what are some of the other things that are going on there?
Yeah. So I can't speak too much to contract for deeds. That's not an area I'm knowledgeable in. But in Philadelphia specifically, I mean, there's just been some inordinate delays and shutdowns in the court system that were done just with no rhyme or reason, just at the whim of the folks running the court system. And so, in order to get things done, you want to have legal representation that's they know how to get things done. Um, because if not, you're just going to get subject to delays and continuations and all of this unnecessary expense and time, right? And as you know, in this business, time is the most valuable thing that we have, and it's impacted by your cost of capital in running a successful note business. And so that's what it really comes down to, especially in Philadelphia. It's a great city. It's where I am and I love it, but you need to know how to get things done and know what you're getting into. So that's what I always recommend to people. Just do a little homework beforehand. Ask for referrals from some of the vendors that you use and some of the colleagues that you know, and they'll be more than happy to help you with that. And that will make all the difference. It's really working with competent professionals and with the right people.
Yeah, I found that having the right attorney is really key. Like, because I have some that are just on top of everything, like like Satil and Briley, and work in most of the states I operate in. And then I've had other firms that I've worked with in other states where they're just more than happy to deal with delays and then just keep sending me bills. And they don't seem to be too concerned about getting things wrapped up. So yeah, it's like the 80-20 rule. There's a wide variation in the performance of some of the different attorneys you can work with.
Yeah, yeah, absolutely. Absolutely. How about you, Dan? What was some of the big takeaways that that came to mind for you from the conference?
Yeah, I think, one of the biggest things I got out of it was just talking to some of these people who have been at it for 40 plus years.
Yeah.
There were a lot of folks there who are, a little older demographic that you're not necessarily going to get the opportunity to bump into online. And a lot of them just had like really fascinating stories. It was just interesting how they've gone
Uh,
through, all these crazy market cycles. Some of them said back to the 70s, and, investing through like the high inflation period in the early 80s, and just all the ups and downs since then. And so, I was talking to someone about like some of the current economic conditions. We've got inflation and mortgage rates going up, and these folks were pretty, unfazed because they've kind of seen it all. Like a lot of them just seem to have the ability to understand what's going on, and they're just going to adapt their investing to whatever the current conditions are.
Absolutely. Just a wealth of experience and expertise. And I agree with you. Being able to adapt your business model to the market conditions is so important for any of us as investors, because there's one thing for sure, right? You can't control the world we live in, right? And change is inevitable. But what you can control is how you adapt and how you respond to the change around you. And so when you meet successful investors that have been at this for decades and decades, you see these patterns. People adapt, they change, they make adjustments. They don't sit on the sidelines and wait, right? And that's, I think, one of the hallmarks of a successful investors. I mean, I'll tell you what, Dan, with our note fund, we've definitely made some changes and adaptations to coincide with the market we're in. We made a big shift to performing notes and focusing on that, because in speaking with investors, the people that we're in contact with every day, people want security. They want notes. They want to invest in a fund with notes with a good solid track record and good security behind them. And so, you know what, when the customers are asking for a product, it's up to us to bring a product that matches what they want. And you may set up a note fund now with specific parameters, specific business model, but things change, and then it's time to adapt to that, so you're always providing a great product, a great value to your customers, your investors. And that's something we seek to do. And it's really just something to be mindful of. Always watch the changes that are happening and adapt to that. If you have to pivot, you pivot, but always be ahead of the curve and taking action swiftly. When you have experience, when you have expertise, that really empowers you to be able to make good decisions quickly and on the fly.
Yeah, and I think that adaptation message is really key, because like one of the things I observed, so I started in notes around 2017, so about 5 years ago. And pricing 5 years ago was, a lot different than what it was now. And in some ways it was a little bit easier. And I noticed like there were a lot of people around that time that had started maybe before that, like closer to the end of the financial crisis, when pricing was even better.
Yeah.
But then when the market shifted, we had this run up in real estate prices and note prices adjusted. There were a lot of people that said, oh, okay, my model doesn't work anymore, so I'm out. And they didn't adjust. And then they're just gone. But there's no reason to do that. You just have to adapt your model to what the conditions are. Because I've done something a little bit similar to what you're talking about, where for the last, probably 2 years or so, 2 years ago, I was doing a lot more non-performing. But what I noticed was the premiums for non-performing notes were going up, and the pricing spread between a non-performer and a corresponding performer was getting tighter. And so I kind of reached a point where I'm like, okay, most of the time I may as well just buy the performer. I mean, yeah, you're not necessarily going to make what I call like a novelty return. You know, everybody loves the stories of, oh, I bought this like non-performing second for 10 cents on the dollar and got paid off. But, you know, you don't necessarily have to have those kind of wins to have a really successful business. So.
Yeah, that's true. I mean, pricing, Dan, I feel that pricing for all kinds of assets has gone through tremendous growth, whether it's notes or real estate or residential real estate, commercial real estate, everything. There's a lot of capital, a lot of liquidity was put into the monetary system over the past 2 years. And we're seeing the impact of that right now with inflation, with rising asset prices, assets of all types. And it's definitely making for some interesting times right now. That's for sure.
Yeah, definitely. The advantage of that, though, is with a lot of the run-ups in the price of real estate. Now, a lot more of these assets have equity coverage, you know, so it often justifies that higher price. But so what were some of the other things you talked about on, you know, due diligence, or maybe some of these more subtle aspects of it that people may not have been thinking about?
Some of the other things were taking a look at who you're doing business with, doing due diligence on the counterparty to your transaction. If you're buying a note or selling a note, or working with an investor, or purchasing anything, you want to look at who you're doing business with. Do a little homework there, because unfortunately, not everyone is as upstanding and as we would hope in the industry. There's some bad apples out there, and it goes for any area of business. And it's so important to make sure you know who you're dealing with. Spend some time and some money to check people out and do some due diligence on the counterparty to your transaction. I think it's something that doesn't get spoken about enough. And it's so important. We hear these stories of people losing their money, or people partnering up with someone, and then things don't work out as planned. And then you go and look and see that, oh, there's a history of this happening with this individual. And what I always say is sometimes all it takes is 10 minutes of Googling a person or Googling a company to see what's going on. And that can help you avoid so many headaches that could come up. And I can't stress it enough. So no matter who you're going to be doing business with, spend some time looking into that a little bit. Make sure you're comfortable with them. Get referrals, ask colleagues. Right. We all know each other in this industry. It's not hard to pick up the phone and make some phone calls, ask people. And I think that will go a long way towards avoiding some not so pleasant circumstances.
Yeah, I agree. That's a subject that's not talked about enough. And I would say most investors don't do necessarily the homework that they should with their counterparties, especially someone like they're investing money with.
Yeah.
I was just having an offline conversation with someone the other day who is interesting character. I think we both know him, but really good at poking into things and scrubbing. And like, he had done a bunch of background checks on various folks in the industry, and it was I'm not going to say name names, but it was mind blowing. Some of the stuff out there, like some of the ones I would not have expected, where people have, you know, big judgments against them, or they've had, you know, bankruptcies and other things that are not necessarily consistent with the way they present themselves. Put it that way.
Yeah. Yeah, that's really, really important. And that's something that for me as a fund manager, I feel is so important because we're working with our investors' capital. They're trusting in what we do, and we don't want to put that capital at risk. You can't be careful enough. Let's
Yeah.
put it that way. And so, doing a thorough process of due diligence is part of what we do. That's part of the value add that we bring to investors is that assurance that these type of business processes we conduct them on an ongoing basis, and it helps weed out a lot of the bad actors that are out there.
Yeah, definitely. Yeah, because they're definitely lurking out there. To your point, like they kind of exist in every industry, but sometimes, yeah, they show up in places where you wouldn't necessarily expect. So what were some of your other takeaways that you had from the conference this week?
Some of the other takeaways that I had, there seems to be a huge interest in the industry, which was really good. I was so pleased to see many self-directed retirement custodians at the conference as vendors participating there, because that's one of my favorite strategies is investing in notes and using your retirement funds. I think that's something that is so powerful because as you know, Dan, note investing, it generates a lot of tax liability. It's an activity that generates tax liability. There's not really any write-offs or deductions. You don't have depreciation like you do in real estate. You can combine that with some of the tax advantage tools that the IRS gives to all of us. It's right in the tax code about using self-directed IRAs or self-directed Roth IRAs or HSAs, right? Health savings accounts. That's a relatively new one, but use those together with note investing, the note investing that you're doing. And that allows you to grow your capital at a tax advantage environment. And that can really be powerful, really be powerful. I love speaking about that. And whenever we have an investor come to us talking about the fund, asking us about it, one of the first questions that I always like to bring up is, are you looking to invest using retirement account funds? And a lot of times the answer is, oh, Fred, I didn't know you could do that. You're able to use retirement account funds. And so the discussion goes in a completely different direction because I'll give them an overview about that. But it's something, something that I was really pleased to see was all the different self-directed IRA custodians were in person present at the conference and presenting their teaching, sharing their expertise and education with the attendees. And I love seeing that.
Yeah, I know I've got a lot of my retirement funds in a Quest account where I have just a lot of performing notes sitting in there. And it's been, those are nice because I just bought, fairly low risk performers, even though I've actually got one that I'm having to that turn non-performing in there. But for the most part, I'm getting like low double-digit yields, and it's pretty stable, which is nice, especially right now with the stock market tanking. So if I look at my other accounts that are invested in stocks, I've just got this like steady growth in my IRA, and it's just not as volatile as some of the other options.
Exactly. It's not as volatile. I mean, the stock market's great. It has its place in each person's portfolio, but I always talk about make sure that you're diversified and diversified into different asset classes. That's so important.
Yeah, I like that as well. I mean, that was one of the things that originally drew me in to the real estate world. It's just not that, like I said, it's not either or. It's not that you should be like all in stocks or all in real estate or notes, but I think having a mix can work really well. So,
Yeah.
but you mentioned something earlier too about, notes don't have quite some of the same tax advantages that like regular real estate or rentals do. And you might talk about that a little bit. Cause I know like one of the benefits of notes a lot of people have is like, okay, you don't have to deal with tenants, you don't have to deal with toilets and that sort of thing. But there are some other factors to consider as well. It's not necessarily a free lunch in that.
No, absolutely not. There's definitely risks that have to be managed for sure. Um, right. Risks, you have to make sure that the taxes are being paid and the insurance is up to date on the property. And there can always be threats to the lien, whether that's unpaid taxes or unpaid homeowners association or senior, maybe a senior lien if you're in junior position. But those are all risks that can be managed, right? They can be managed on an ongoing basis. Important for you to, as an investor, to be cognizant of that and make sure you have a process in place to manage those risks. And if that's something that seems too complicated, too complex, then maybe a better option would be to be a note investor by investing in a note fund where the fund managers and their team are taking care of a lot of that risk management activities on an ongoing basis. But it's really important to do that, to be paying attention and monitor things on an ongoing basis. But the tax advantages, getting back to your original point, with self-directed retirement accounts and HSAs, it's super powerful. And notes do not give any tax advantages at all, and instead they give you tax liability. And so it's so important to have a strategy, have a tax strategy for yourself, for your portfolio. I always say it's one of the most important areas of value that your CPA, your tax advisors can give to you is with tax planning. You don't go to your CPA just so that they do your tax return for you every April. That's not what they're there for. Yeah, that's an important service they provide, but it's also the strategy and planning that goes on throughout the year. It's super important. I always encourage people make regular appointments to meet with your CPA, with your tax advisors, and make sure you have a plan in place and you're constantly reviewing and updating that plan based on the different activities that you have going on.
Yeah, and then I guess last question. So you mentioned some of the benefits in note funds. So like what are some of those advantages for folks who are getting started of putting money in a note fund?
Yeah.
Versus figuring out all these processes and buying notes on their own.
Investing in a note fund, it's a great option for anyone that's just getting started. Maybe they're not comfortable or they don't have the expertise yet. When an investor participates in a note fund, it's really that they're entering into a collective partnership almost with the fund managers. And for the investor, he or she is able to be a passive investor, but benefit from the expertise and the experience and the relationships that the fund managers have. And that goes a long way because, as I said earlier, we talked about this. Relationships are the most important thing in this industry. And so when you have access to those relationships to be able to buy notes, that's powerful. That's so powerful. And so for someone starting out, or maybe someone that is interested in note investing, but they don't have the time, maybe they're a successful professional or a successful business owner, they don't have time. And so a note fund is a great option for someone that wants to do passive note investing, as well as benefit from the relationships and the expertise of the fund operators and the fund managers.
Yeah, very cool. So I think it's probably a good spot to wrap it up there. Well, Fred, thanks again so much for for coming on. Really appreciate it.
Yeah, thank you. Thank you so much, Dan. I appreciate it. It's always great to come on your program and catch up on the new things happening in the note investment world.
Yeah, for sure. All right. So Fred, so before we leave, how can folks get a hold of you if they want to learn more about what you do and some of your funds?
Yeah, absolutely. There's a couple of ways. I'd love to invite everyone to check out my book on note investing. It's called The Little Green Book of Note Investing. It's available on Amazon. And if I'd love to connect with investors. So please visit my website. You can connect with me there. It's at fredmoskowitz.com. Or for an easier spelling, you can go to giftfromfred.com and connect with me there. And also, if you prefer to text through texting, you can text the keyword money to the number 215-461-4433. I'll repeat that again. Text the keyword money to the number 215-461-4433, and then just follow the prompts and we can connect that way. So give you a few different ways. And I always love speaking with investors, learning about what they do and interacting in that way. So thank you so much, Dan.
No, thank you, Fred. Really appreciate it.